Hello everybody, this is Arizona Javi, and today let's go over the Goodyear real estate market. Everybody has nothing but good things to say about Goodyear. We have a bunch of new stores being developed, a bunch of new models and new builds everywhere, and we're gonna get a Bucky soon. So everyone is just excited about in terms of moving into Goodyear and real estate. But is the market really that great in Goodyear, or does it kind of suck? Let's look at the data today and get a good feel of what the situation is so I can help you make a better decision on your home buying goals, hopefully this year, next year, whenever that's going to be. So if you are a first-time home buyer or a home buyer looking into Goodyear, the first thing you should look at is what is for sale? What does that look like exactly? So we're going to pull up the MLS here and just get an idea of what pops up, okay? So if you go on active, let me move myself over here, don't unblock the numbers. Active single family residence homes in Goodyear, we're going to see primarily two sections. We're going to see well, there's really three sections. Estrella, there's that central Goodyear area, and then there's north of the 303. So we're going to see there's currently 621 houses for sale, and we're going to do our active versus pending versus sold, because to me, when I'm looking at a market, it gives me a good idea of what's really happening here. Okay, so for those that don't know, an active is literally a house for sale. A pending under contract is a house that's already accepted an offer and is in that 30-day period where it closes. And a closed house is something that's already sold, but specifically looking at closed houses in the last 30 days. So there is 621 houses for sale. If we look at what's under contract and pending, we see there are 264 houses that are currently pending. And if we look at the past 30 days or 31 days-ish, you get 226. So we can get a few numbers from this, okay? The first number we can deduce is what's our months of supply look like. So in other words, months of supply is if the same rate of sale continues, so in this case, it being every 30 days is about 226 houses that sell, how many months would it take to sell all of the listings? According to my very low level math, it looks like it's going to be about 2.74. Now, to get a good idea of what that really means for Goodyear, let's actually look here at our months of supply numbers and look how that number looked like during 2020 and 2021, where it was an extreme seller's market, right? Where everything was just flying off the shelf. We were at a months of supply of 0.5, 0.6, and then slowly as the months went on, it started going up and up. But that extreme seller's market where you had to overpay like a lot, it was under 1. In 2022, which was not a fun year for buyers, and this is where inventory started spiking and prices started increasing, that went up to about 5 some months, right? So on average, at least the way I like to think about it, is if we're like under 3, or let's say 2 to 4-ish, we're like in the semi-competitive state. If we're under 2, then we're in an aggressive state where houses are selling quicker. And over 4, over 3 is going to be, well, over 4, I should say, is going to be a little bit more loose, right? Things are taking longer to sell. And right now, at least in 2026, we see an initial boost. It stays high for the first 2-3 months, and then it starts dropping down. And we see in 2025, something very similar happened where we see that initial boost, it stays high, and then it starts dropping. So that's why from April till around, let's say September, these are traditionally more aggressive times to buy where there's more competition. There's more inventory and more houses to pick from, but you're going to have more competition during this time. And traditionally, you're going to have less competition during here and the beginning of the year. So from what I'm seeing, it's just business as usual. We're starting high. We started going low. I'm not seeing anything really concerning. The second number we can deduce from here is, are there actually more houses going under contract? And the answer to that is a clear and outstanding yes. So we were at 226 and now we're at 264. So that means there's more people looking to buy. There's an increase of buyers. Normally, this is a good sign. That means there's more people entering the market. Maybe not a good sign if you're looking to, go grab a super deal and try to be, like very aggressive with your offers. But overall, for the state of the market, we want more buyers. We want more people out buying real estate because it just helps the market, helps everything, et cetera, et cetera. So there are more buyers entering the market, which is a solid sign. But what does that actually mean for the actual sales price? So let's go look at the median sales price to kind of get an idea how it's been affected. So if we see here, this is just looking at Goodyear, all single family residence houses in between 2021 and 2026. We can see here, it's obviously there is the big COVID climb, there is a drop, and it's just kind of slowly been balancing here in this range. I'm not seeing any huge increases. I'm not seeing any huge decreases. So overall, if you bought a house in the last, or Goodyear, I say bought in Goodyear in the last 3 or 4 years, you're probably still around the same value. You haven't gained that much equity, and that's just been the tale of the fight, right? It's just if you're thinking about buying a house right now, it's not a great investment. You're not going to get a lot of return on your money. It looks like Goodyear hasn't really benefited from it, and a lot of people start, saying, "Oh my gosh, look at this chart here. It looks like Goodyear's trying to take off." Yeah, but it's because you're looking at this like specific little section here where things are looking to be better, but if you think about it, you can zoom in on any part of this. Like you can zoom in here between July to September, and it looks like the market's doing great, but then it always drops at the end of the year. So if it's going to continue to do the same thing, it's going to be increasing right up until July, August, September, when it starts dropping again. But before you get all excited, it's just going to, increase again during this time. So it seems like we're still kind of stuck in the rut. Values are staying the same. There's not really a lot of exciting things happening. There's not a lot of equity being built. People are buying here. They're moving here just to kind of get into a more suburban area in the West Valley, but there's not really huge money to be made, which, in my opinion, it's not a bad thing. Is rather have a market that's maintaining its value than losing its value. And now what I think is the most valuable part about this is let's look at what's actually what buyers are getting right now in Goodyear. Because a lot of times you'll meet with an agent and they'll tell you, "Oh yeah, brother, we're gonna get you, all the closing costs you want, or we're gonna get you 20,000 below list." But you want to actually look at what people are getting, at least in the last few weeks, so you can see what's most likely to happen with you. Because the thing about right now, at least what I'm experiencing with sellers, is they're not gonna just give you everything. Even if they're overpriced or maybe their house hasn't sold for a while, they're not gonna just give you everything in the kitchen sink. And even if they do price reduce to a lower price, they're not gonna then continue to lower their price even more with an aggressive offer. So we're still seeing sellers maintaining that stubbornness, that aggressiveness of like not really maintaining a lot. And let's see if that's true from Full of Caca. So let's look at the last 7 days of solds here in Goodyear. Let's go look at the just a quick reminder for if this is the first time you're watching this video. I don't blame you because I haven't made a video in this channel for like a year. So let me kind of just break down what we're looking at here. This is a list of all the houses that have sold. It's sorted by the newest change. This original list price is the house that the price it was originally listed for. The list price was the price it was when it got an offer accepted, because the houses go on the market and then they reduce until they sell. And this is the actual price that it sold for. Over here, we can see how much seller concessions they were given to the buyer. And this is what people commonly call the closing costs. This is how much closing costs the seller helped the buyer with. So we can see here new builds not really reducing their prices, but giving a big chunk of closing costs to the buyers. Pretty traditional stuff. This one originally listed at $589, way too overpriced. After 200 days on the market, it eventually reducing the price to $490. That was the right price it should have been. Then at that point, it sold for $482. But they also gave $14,000 to the buyer. So in essence, this buyer paid $482, but also got $14,000, well, basically $15,000 of earnings. So that means the buyer got like $23,000 of value reduced from the original list or the list price of the house. This one originally listed at $425, too high. After 92 days, it didn't sell. Once they reduced it to $395, it sold for $383. So the buyer bought it for $8,000 less, and they gave no seller concessions. I don't know about you, but I'm starting to see a trend here. Listed $540. Eventually, I guess they reduced it by $1,000 and they got an offer. They got it, was that $20,000, almost $20,000 less, and they got $16,000. So it seems like if a house is overlisted, they get beaten up in Goodyear. They get beaten the frick up, like my little 2-year-old. Whenever one of us says, "What the heck?" she says, "No, what the frick?" So now I keep saying "what the frick" everywhere. So they get really fricked up. But when there's a house like this on Weldon that gets listed appropriately, it sells. Not only does it sell quickly, but but it sells for the same price. And if they give closing costs, it's going to be just a little bit. Okay, these new builds, they're going to give a bunch of closing costs. It's just what they do. We're not going to really look at that. Listed $395, sold for $385. They got $5,000 off the price, and they got $7,500 in concessions. So it looks like this one on Washington, $445 down the road, but they got $14,000 of closing costs. So closing costs are starting to be very, very prominent in Goodyear. It looks like if you're looking to get closing costs, either for purpose of buying your interest rate down or just getting that closing cost paid so that way you save that money, it seems like it's a good situation for you, so you can save that money there. In some of these situations, I'm seeing it a lot more common to be a little bit more aggressive with the offer, at least in Goodyear, what I'm looking at. Every city's different. I always tell people when they're working with me or someone else or whatever, you want to do a micro analysis of the market when you find a house you like, not only the specific city, but the specific neighborhood. And at least what I'm looking at in Goodyear, there's a very high chance that you're going to get closing costs. You're probably going to get a price, a little bit of a price adjustment. If the house is overpriced heavily, then yeah, you're going to probably get 10, 15K off the price, maybe 5 or 10K if it's not just a little bit overpriced. But if it seems to be priced right, you still have a chance to get some closing costs from the looks of it. You're just not getting very many. So basically in Goodyear, in terms of spiciness, I give it about a 3 or 4. It's not very spicy at all. It's spicy being like heavy competition, lots of buyers hitting the market, like cash buyers you have to compete with. There's some such cities that we make an offer and there's already 2-3 offers on the table and something like that. So I am not seeing that situation. Most of these houses are a little bit on the higher side. Of course, like any market, if a house gets listed at a right price, it'll sell quick. But from the looks of it, it's not very spicy. You can have a good time looking for a house. But it could change, right? It's been very stable for the last few years, but it just, at any given moment, if there's a new program that pops up or the interest rates start dropping sharply or something happens, then I can see this start to kind of tilt the other way. If you have a city that you want me to talk about next, please make sure to give a comment below. And of course, as always, if you're looking for a real estate agent in the Phoenix, Arizona area, you can just go to vidaniateam.com. I know it says Vidania Team, but it's really just me and my assistant. So I'm trying to make myself sound cooler than I am. You can go and start creating your search, start looking for a house. It'll make you make an account if you start really actively looking. That information will go to me, and I might reach out to you and text you or say, hey, what's up, man? How you doing? Are you looking to buy a house soon? What's going on? Right? We'll start chatting it up, becoming BFFs and for 3 or 4 months, and then you'll move in and forget to invite me to the carne asada, and I'll be heartbroken. I'm just kidding. All right, guys, take care. I'll see you on the next one.